Welcome back to Davos Worldwide's critical conversations from the sideline of Davos. I have the distinct pleasure of having with me a dear friend and one of the visionaries that we depend on for green energy finance. Without further ado, let me introduce Serhat. Serhat, if you can give us a little bit about yourself and what you're doing currently, and then we can have a discussion.
Thank you, my friend. I really appreciate the opportunity to join this audience from Davos, actually. I'm going to lift my computer to show everyone a little bit of traffic behind me. And I also do want to apologize for potential noise that I may have. I sincerely am sorry for that. It's very hard to find a spot that's quiet in Davos, as you can imagine. By way of introduction, I'm an engineer. I'm Turkish, farmer's grandson, very much involved in technology my entire career. In 2009, I accidentally became a venture capitalist. That wasn't the career plan. 2012, I started running an international accelerator program to help entrepreneurs outside of the US to scale their businesses in the US and get funding. In 2018, I started investing with the support from family offices and corporations. I invest in three areas, mainly deep tech solutions in all these three areas. One of them is energy transition, where energy storage and liquid technologies basically improve the electrification of pace of it. Second area is human essentials, where we focus on innovation in agriculture, primarily automation, both for indoor and outdoor agriculture, and biotechnology solutions to replace chemical inputs like fertilizers that we have today. And then the last part is industrial circular economy, where we focus on mainly logistics and upcycling of waste for high value materials. I've been doing this as a what's known in the industry more like a ad hoc investment for my entire career. But very recently, we announced a partnership with DGXQ's capital that elevated our fund capacity to $5 billion for equity investments over the next 5 years in these domains and $20 billion debt vehicle to figures in tandem with the equity fund. I'll stop there as for introductions, but I'll expand on these as we see fit.
So we've had some deep conversations about the future of finance, especially when it comes to green energy.
Yes.
We've noticed that the opportunity is in the global south. There is a lot of expansion, there is a lot of investment requirements, and there is a lot of profit potential for investors in the global south. So
Yes.
what are your thoughts on the global south and the expansion of green energy?
So most of the things that we get excited when we develop economies are really remarkable technologies. They're right. And all try to move the needle, things like fusion, things like small modular reactors, their batteries, solar equipment. But they are typically designed for wealth and cost footprint of Western economies or developed economies. It is almost impossible to apply and scale those technologies to emerging or developing economies without finance structures, creative ways of which these innovation solutions can be deployed. So one of the things that we try to do is once the technology proves itself in its domestic market, we provide that technology company equity and debt capital that can work with a local family office within the emerging economy, like inside global south, to deploy the technology in that country with the partnership of local families, local business. What this does is, instead of creating an attractive relationship based on the technology with an emerging or developing economy, it actually establishes the technology in that country. And it provides not just a solution, but a growth lever over time, no matter how small it might be. This also creates opportunities in those ecosystems to encourage founders to come forward with new solutions. We are working on some models that we want to deploy from a funding perspective in Bahamas, as well as East Africa and South Africa. Too early to talk about these in detail, but if these regions require financing models that fits to their needs, not dictated by typical investment financing that we have. When it comes to specifically energy transition, innovation funding is one thing, one problem, but commercialization is the other one. And that's where I focus most of my energy, creating structures to commercialize innovation as well in those countries. With the help from local family offices, local corporations that have an interest in developing their economies and increasing their capacity with these technologies.
Yeah, so when you look at these companies and you're looking to match capital, whether it's originating
Yep.
in the West or from elsewhere, um, what are the primary considerations as far as your return on investment? Are you
Okay.
are you looking at it from purely a ESG standpoint, or are you looking at it from a real world competitive investment return for investors?
Um, so I look at from an ESG perspective and financial return. To be honest with you, first at the same time, I don't think that there is one that you have to look at first and then the others. And the reason for that is my personal belief is a mantra called food is medicine. And the basic explanation is that the human beings have three core needs: air, water, food. Everything else comes secondary. If you don't have air, you die in 2 minutes. If you don't have water, you die in 3 days. If you don't have food, you die in 3 weeks. To bring food uh, that's grown environmentally sustainably and nutritiously and affordably to 10 billion people in 25 years, you have to do transformative things. And you can't really just focus on financial returns when you embarking on transformative things because they take a long time. And if you just look at IRR or those kind of metrics, you might as well put your money into real estate. But when you think about transformative solutions, they're also making significant impact on ESG target pyramid. They are usually much better alternatives for environment. They are usually much better to grow or scale across the globe. And if they do achieve those results, then there is significant returns. That's possible. A lot of a lot of consulting firms recently came forward with analysis showing that deep tech investments are actually better than non-deep tech investments or at par with that. So if I focus on something transformative, something that which may take a little bit of longer time, which usually is not the case, but let's say it's the case, I still have a very high return potential because when they are successful, they go across the globe. One could argue that, other things also go across the globe, but they're not beautiful solutions. Beautiful solutions, when they go across the globe, they bring substantial returns. And they do bring relatively quickly. And the key to that is providing meaningful financing to scale them in global south, not just developed economies. Not many developed economies are like US. Most of them are by themselves small economies internally. Like for example, think about fusion, power generation in 2030. How many of that I can deploy in Finland, Sweden, Belgium? It's limited, right? How many of that can be played in India? Sub-Saharan Africa, Latin America. Suddenly, it's a different scale you're thinking about. Obviously, every technology is not a fit to every country. Countries that have no transmission lines or limited transmission lines may have to go with small modular reactors. Again, my earlier point holds good. You can deploy a lot more to those countries. And when you can, with proper financing attached to them, that creates a much larger return than other solutions we might do.
Yeah, one of the issues that we've seen, obviously over time with the global south and the investments in the global south, is that the return on individual infrastructure investment can be lower, but like you said, the volume of it can be so much higher, that it normalizes the return on an IRR perspective, right? So
Right.
yeah. But do you think there's a risk to alpha when you look at some of the global south?
Um, there is no investment with zero risk, right? This is why local partnerships are extremely important. I'll pick an example, not to imply anything, but let's say I'm going to bring, SMR technology to South Africa. I have to, if I do it by myself, I need to learn the market system, legal system, financial system, all of that. And it's highly likely I will make a mistake, despite the fact that I may hire a local person. But if I partner with a local family, a local existing business, which already knows this really, really well, they will eliminate most of this. But you and I both know other externalities can create risks. Easy answer to that is geopolitics, but more telling answer could be natural disasters. You deploy something somewhere, next day something catastrophic happens, then the entire infrastructure is gone. And nature has that problem. You keep on seeing this over and over around the world. So yeah, there are risks, but I think there are ways to get through this. I'm not the kind of person who will give up because there is risk. I'm more interested in working with like-minded people to find a solution. And I don't want to sound like I feel I can't find a solution for the challenge, but most can be solved in my view. Scarcity creates an opportunity to innovate like we haven't thought before. That, that's my mentality.
So when we look at AI, and deep tech applications of AI,
Mhm.
or deep tech now, relying on AI, the efficiency factor that it's bringing into it, especially on power management, transmission, and critical areas. What are you seeing as the trend for the future? I mean, let's assume that we break three thresholds: quantum,
Mhm.
computing,
Mhm.
okay,
Mhm.
fusion, okay,
Mhm.
or I should say, not fission but fusion, right?
Yeah,
So
exactly, exactly.
and let's look at the last one, and which is to say that there is more investment capacity available for this technology. What do you think the
Okay.
ideal future looks like?
So I see a future where um, real value is going to be creating user experiences that are meaningful to everyone around the world. I'll give you an example, and this may not be the perfect one, but I'm hoping it'll help me articulate myself. Imagine a hotel, right? The land is owned by somebody, building is owned by somebody, and the brand is owned by somebody, and there's an operator, the fourth element. But they're all aligned to serve the guests that are passing by, right? To stay there for a while. Um, you can make it a local example, restaurant, land, building, operator, as an example as well. What makes them valuable is the more people use them, the more valuable they become. I believe we're going to see a shift in thinking when fusion, particularly, becomes available about energy and the cost of it. we will see a difference in terms of when quantum computing can do so much with so little infrastructure. Our perspective will change about the values. And the abundance of innovation uh, creates other, value on that platform. Um, if you think about, for example, cell phones or smartphones that we have today, let's assume for a moment, there are only two versions of it. I don't mean anything for the other brands, just for the conversation. So there's Samsung and there's iPhone. Okay. Now, both are phenomenal terms. If you're a billionaire, or if you're someone who's only making $40,000 a year, that's the best one you can get. And that's what I'm talking about. It doesn't matter if you have $1 trillion wealth, there is no other phone you can get better than that. So that's how I see the quantum computing and fusion will allow us across the world to take advantage of the benefits that they will bring into AI realm. The human augmentation, augmenting human capabilities with AI is going to become abundant. And we're going to improve lives a lot. Till we get there though, we need to continue investing in infrastructure technologies like new chips, new kinds of chips, new kinds of data centers, new ways of powering data centers with, much better geothermal, much better storage, much better solar systems that are coming online. Hopefully, with less issues around, geopolitics, which I'm not trying to be political, but there is a clear, challenge that we have to work around logistics of those kind of things. So we have to, because in my mind, we're 3 to 5 years away from quantum computing to become usable. And if you talk to any fusion company, the range that they'll give you is 2030 and 2032. That is a very close time for us. We're already getting towards the end of January in 2025. So we're getting there rapidly. So I am very hopeful that I'm very hopeful that Global South will benefit from this as well. Now, I would be more hopeful if we can actually engage entrepreneurs from Global South more pragmatically, more efficiently in this path as well. So how can we actually elevate their ability to think about what's coming, bring forward innovation that we can actually scale it to global level as well? I don't want anyone to think that I'm thinking about taking innovation from West or developed economies and then push it to the global south or else. It's the opposite. Anyone who knows me know that I started this in the opposite. I believe that if we can take advantage of both realms, we can make 1+1 5. That's what I believe.
Yeah, no, absolutely. Let's come back to now and let's look at where are the gaps. What are you seeing as the gaps in green energy?
I'm going to be very practical. Two things that are probably most important, not to suggest that there isn't anything else. One of them is structured financing has to come to energy transition. And it's not just one, structured financing doesn't mean one thing, but it has to come rapidly because deep tech startups have two value of debts. One is the early stage, like Series A rounds, etc., like everybody else. And then the second value of it is Series B or C, where like they have to build a factory. There isn't proper financing mechanism at that stage. The existing ones are prohibitively expensive. We have to change that. That's number one. Number two, we need to recalibrate our expectations with respect to financial return. We cannot expect big tech to deliver the financial returns in certain cases as fast as a SaaS could do, but that's okay because you can balance your portfolio with different things. So this portfolio mentality needs to come to deep tech very quickly. Now, remember I said earlier that deep tech exits are not as long as not as long as people tend to believe, and the IRRs are not as low as people tend to think. I highly encourage people to do some research on this. The numbers are not bad, it's actually better. So mindset shift is the second thing. Investing in deep tech across the globe is necessary, it's possible, and it can create returns that the investors are looking for. Maybe the third thing that I would add to that is we have to pay attention to talent. If you think about a fusion startup, the kind of talent that we need to build that incredible machine is scarce. It's not enough. And it's really, really important that we accelerate the development of engineering talent. I understand that it's also important to deploy solutions into other parts of the world. It's implementing these technologies are going to be complicated. So you may have money, you may have the desire, you may have the legal infrastructure, all of that, but if you don't have people to install and maintain these complicated solutions, the benefits could be limited. So those are some of the things over the next 5 to 10 years that we should collaboratively try to solve, but try to solve across the world, not just in 1 or 2 places per se.
Well, Serhat,
It's monumental.
yeah, no, absolutely. I completely agree. And I thank you so much for your time. I know you have a pressing engagement next as well, and we need to move on to our next panel. But I congratulate you on the expansion
Thank
of
you.
your capacity to do
Thank
this.
you.
And I know that you will lead that mission of creating the correct capital stack for deep tech to accelerate in green energy for sure. And
I
I think that
appreciate it.
that's
Thank you.
very good advice. And it's also very good advice for portfolio managers, asset managers, and family offices to understand and take a look deeper at what the return structures will be, not at a short term, but at long term, because I think over long term, the IRRs will equalize and
Yes.
the exit values will be much higher
Yes.
than the normal side of it. So with that, I'm
Thank
going to
you.
say thank you so much, and it's been a
My
pleasure.
pleasure.
And I will look
Thanks for
forward to it.
having me.
Enjoy your time in Davos.
Thank you
And
so much. Thanks for everyone.
thank you so much.
Thank
Take
you.
care.
Bye-bye. Cheers.
Bye bye.